Hello, and welcome to FTT Chats, where we sit down with some of the great and the good of fintech for a bit of a chat. I'm Liz Lumley, and today I'm speaking to Matt Cockayne of Yapily. How are you, Matt?
I'm great, thanks, Liz.
Excellent. I like your background as well. I like your rugby shirt signed in the back. That's very cool.
Thanks. It's an old World Cup shirt from England. So it's one of those. I had the setup when it was just in the days of audio conferences. Now we've gone to video.
You can't have laundry in the back of you anymore. It's a whole new ballgame. So I'm going to start off with a question that I ask everybody. So you can be introduced to everyone in our community. Who are you and what do you do?
So Yapily, we are an open banking, open finance connectivity player. Mm-hmm. We were built for open banking, set up by our founder Stefano 3 years ago, and he went. It's a really interesting story. He went to a talk about open banking and was so inspired by the potential it could offer that he quit his job the next day, set up Yapily business, and here we are 3 years later. So really, we simplify the world for people who want to take advantage of open banking, whether that's on the data side or whether that's on the payment side. By doing that, we connect to all the banks, we take away the complexity, we standardize all the various pieces that banks have built, because every bank has done it in a completely different way. And then our customers just connect to us once. So that just makes that whole process much simpler for them. And it gives them today European coverage, and in the future it'll be global coverage as more countries adopt open banking. We currently see about 50 countries doing that globally. And that number is only going to increase. My role at Yapily is I look after everything commercial. So I'm the Chief Commercial Officer here. So anything that's kind of customer related and market focused sits in my world.
Yeah, I'm wondering whether you can go into some of those numbers. I mean, taking sort of, the global pandemic off the table. I mean, 2020 was kind of supposed to be a milestone year for open banking globally. Like, what kind of numbers are we seeing?
So I think if you kind of have to look at it in the different countries. So the UK is the furthest ahead compared to everyone else. Part of that's due to the kind of the CMA order that drove the setup of open banking in the UK. So that's driven the UK to be that bit further ahead. I saw the recent stats from OBIE where more than 400 million calls in the last 2 months. That's increased from 30, 40 million a year ago. So we're seeing kind of a tenfold increase in 1 year. And really kind of, whilst 2019 was meant to be the date when it all went live and was fully working, 2020 is really where we're seeing adoption go. So we've had early adopters move into the market, mainly fintechs. A couple of banks have tried a couple of aggregation solutions, but now we're seeing significant players move into the market, and they're seeing the potential that open banking can offer for both them as firms, but also for their end users, whether that's a consumer, whether that's an SME business, or whether that's a corporate. All of these kind of user groups can benefit from open banking.
Is that kind of the reason for some of the increases? 2019 it launched, people had to get used to it, see its potential. Now the work has begun, and that's why we're seeing an increase.
Absolutely, I think the APIs when they were first released weren't that stable, and you couldn't really run a business off them. Now, at least in the UK, we're seeing far higher stability, and you can run businesses and service offerings off those pieces. I think there's a few factors why the growth has gone there. The first one is that people have moved off providers who are using legacy technology, whether that's kind of screen scraping or reverse engineering, where you had to share, as a user, you had to share your credentials, your login details with that third party. Under open banking, you don't have to do that. So it's secure, it's via the bank where you actually log in and you authenticate. And if you're on a mobile, you can use that biometrics to do that. It's also much, much quicker. So in open banking world, we're kind of seeing 99% uptime and higher. Some of the banks, it's much higher. Under screen scraping, I used to work for one of the big screen scraping firms. So I know that it's a bit of a challenge. And that's just the nature of if you're hitting a website versus a dedicated API, your stability and your uptime is going to be much lower. So if you're building a business off and you want to use open banking, the APIs for PSD2 and open banking are far more stable and actually give you confidence you can run that business, and your customers will have a much better experience, whether that's through uptime, whether that's through speed, whether that's through the user journey. Giving consent in open banking, if you're on a mobile app, is just simply logging in biometrically. You don't have to know your username. You don't have to know your memorable word. You don't have to know the place you were born or what your first dog was or any of those things that if you go through a screen scrape journey, you have to understand those to be able to log in as if you were setting up your online banking process. And then separately, payments. I think payments is really the piece that will drive this significantly. I was on a webinar last week with Imran, the trustee of open banking, and he was quite clear that he sees in the UK 4 or 5 million users will be making payments through open banking relatively soon, versus kind of a somewhat smaller volume who are going to be using the data side. Payments was just never available in the previous instance. So under open banking payments, you can make instant payments, and they're much cheaper than going through a card scheme or something like that.
Yeah.
So as a consumer, you can make that payment. And you're seeing some pieces go to market, like Ordo's solution with the neighbor to neighbor thing in this COVID time. You can go buy the shopping for your neighbor, and you can make a payment instantly to them while they leave the shopping on your front door, and they just upload the scan. So that kind of stuff is really transformative. I know everyone talks about open banking and transformation, but I've worked in financial services for a long time, and this is actually one of those true transformation pieces. Is it going to happen this month? No, but over the next couple of years, I think you'll really see that significant move to it.
Yeah, I'm glad that you brought up sort of, that example of a real world customer benefit, that especially during the global pandemic, being able to shop for maybe a vulnerable person on your street and in your neighborhood. I mean, I try to sometimes like to steer the conversation a little bit away from stuff that only fintech nerds understand. We talk a lot about open APIs and things that are transformative, but for people on the street, how would you explain the non-fintech nerds of us how this is beneficial to them, how this will be transformative for their life?
So there's a couple of examples I think that are good to use. A really good one is applying for a mortgage. If you want to apply for a mortgage, not only will it take multiple days, but I think the current thing is about 60 days to go through that process, anywhere between 30 and 60 days. You have to manually either post your bank statements in the past 3 months, or you have to scan them and email them, and then someone's got to run OCR, or they've got to actually manually read those documents to verify that you are who you say you are, and you get paid what you get paid. If you use an open banking piece with data, you can give that same data in a second. So like the whole customer journey of applying for a mortgage can be simplified, and you can do that for loans. You can do that for any financial product you're applying for. If you have to verify who you are, because under open banking, you can validate that you have an account in your name. So therefore, if the banks run their kind of customer checks at KYC and AML and those kind of things, they've verified you are who you are. So you can use that piece, and then you can show your transaction history. And actually, for people who don't have a good credit file, or they've got a thin credit file, like a student or someone just entering the workplace, they might have earned quite a bit of money, or they might have some savings, but because they don't come onto a credit piece, they don't show up. But actually using open banking allows them to actually be able to access those same financial products through the actual transaction data that they have. And you can put a minimum of 12 months. Some of the banks in the UK offer up to 7 years. So actually it's leveling out that kind of playing field of who gets access to what financial products. So open banking for good that people talk about, it's very important from that side. Well, that's so kind of on a data side, which is what a lot of people see open banking for. Those are kind of the two cases. On the payment side, I think it's kind of that instant payment piece. You don't have to rely on credit cards. So again, kind of moving away from that credit world, you can see what's in your account. You can then make a payment based on the funds you have in your account, and it's transacted. So you see it straight away. From a spending perspective, it's far easier. And then for a merchant, they will actually save money if they move off a card scheme or move off a PayPal method or something like that to an open banking payment. It's so much cheaper. We've seen examples of customers saving 80 to 90% on their transaction fees. So that's either going to come to lower prices for that end consumer, or it's going to actually give a bit of margin to that merchant. Given how merchants are generally struggling in the current pandemic crisis, I think open banking is kind of one of those things at right place, right time. This speed of digitalization that we're seeing as a result of people having to isolate and not being so in person for their transactions.
Yeah, I think your answer really touched on and led to my next question. I mean, you're going to be speaking on a panel on our FTT virtual spring event on June 10th, which really looks at how the conversation has moved on from open banking to open finance. How do you explain that? Why are we now talking about open finance? How does that open up for everybody?
That's a really good question, and it's kind of in fintech land. Everyone likes the new buzzword, and open banking. So let's move to open finance. But on a serious note, open banking is kind of step one in opening up financial data, and really the whole concept of it is to empower the end user, whether that's a consumer, whether that's a business, or whether that's corporate. It's actually about empowering them with their financial data to make better choices. So under open banking, the minimum someone has to provide is a current account and a credit card. However, if you're a consumer, that's not actually that helpful in seeing the full financial offering of what you can see. Actually being able to see pensions, for example, which is archaic. And I personally have a bunch of different pensions. I've merged some in, but accessing that pension data is really quite complicated. Putting things like pensions in, mortgages, loans, even insurance. Having all these financial services actually available for an end user to access through potentially one application. Lots of banks are kind of trying to build their multi-bank of choice. They want to be the bank that you see all your other bank details with. Actually building that capability and be able to access as an end user all those financial pieces. That's what we talk about open finance. And lots of other territories have kind of learned from what the Europeans did. So PSD2 is the European law that's driven open banking. And it was very specifically set for current account and credit card. Australia are going live, hopefully, end of Q3, maybe Q4, with what's called the consumer data rate. And they haven't limited it to just those two products. So it's all financial products that are going to go in. Brazil are doing the same thing. So people have kind of looked at what the Europeans have done, and we're furthest ahead with the early adopters. And they're trying to learn from that. And actually, do we really need to limit it to just these account types? Why would we do that? And in Australia, actually, open finance is step one. It's then about energy and telco. So really, it's about moving to this world where APIs are kind of providing that connection to all this data that's previously sat behind the gated garden, the walled garden of a bank or a large corporate. And it's actually empowering the individual that it's their data. It's not the company's data. It's their information. So it should be for them to be able to use and to get the best services and the best provision for them. And if that's from their current provider, great. However, if it's from someone else, then they should be empowered to be able to use that data to get those services from someone else. And I think it will drive competition quite significantly. So I think whilst we say that, kind of you see the neobanks are driving adoption, but there's still that resistance to move from a lot of people. You see that typical fact that you're more likely to get divorced than you are to change your bank.
Yes, I've read that one.
But that's because people haven't been able to access their data, and they haven't really been able to see what better propositions they could get from someone else. So I think as soon as you can share your bank details, your mortgage details, your loan details, if another provider can actually see that full wallet share, as we kind of call it, of your life, you'll be able to access much better services, much better products as a result of that. And it doesn't then need you to have a broker or pay for that kind of privilege of paying for a broker or paying for a financial advisor. It actually accesses and opens that up to everybody.
Wow. Exciting times. Over there, yeah. No, I agree with you. That I would lovely to see that unfold over the industry, all of that sort of hope and promise. So we're gonna close off our chat with a bit of a unfortunately sort of a question about the global pandemic. That we're doing this here. We're both working from home. How have you been dealing with the past few months, both sort of with your team at work and personally?
So it's a really interesting topical question. As the pandemic was unfolding, as a firm at Yapily, we took the view to try to split ourselves into kind of red team and blue team. So we'd split the company in half to try to minimize that interaction. That lasted the sum total of 2 days. We're basically told if you can work from home, work from home. As a technology company, everything we do is set up in the cloud. We use G Suite products. Our service is a cloud-based solution. So it was relatively easy for us to flip to that. However, we still had to provide for our team. So some of them we had to provide desks, some we had to provide monitors, so they could actually work effectively and keep their productivity. There's then the piece of how do you replace those kind of interactions. So like within my commercial team, we have a daily stand-up on Zoom. I seem to spend my entire life on Zoom these days. Actually, and we kind of do that. But also we have some fun sessions as a company. We've done team quizzes. Someone's running a MasterChef session. So I think it's about trying to keep those kind of cultural things. As a startup, it's really important that you invest in that culture and that you actually try to, and you value people. There's a lot of demand for good people. There's still, even with some of the unfortunate redundancies that are happening, there's still a lot of demand for good talent within the fintech space. So it's about empowering people to be successful in whatever status they are. I think it's interesting. It's kind of driving a slight, even when we go back to the office, will we all go back to the office 5 days a week? I don't think so.
No.
I think that's more of a variance. And we're seeing that some people are actually more productive working from home. So maybe some of our roles can just become remote. We don't have to have everyone in our central London office, which from kind of a cost perspective is great as well. But equally, if that's what works for that individual, we should try to support that. I think from our client side, it's varied. The large corporates have all actually taken this opportunity to go, actually, strategically, we still want to do something with open banking, let's proceed. So they've kind of moved forward. I think if B2C fintechs are having a harder time, we're supporting some of our B2C fintechs by kind of supporting their commercial contracts with us and making sure we can support them as much as possible as their partner. But we're still seeing lots of demand come through the pipeline of people looking to use open banking. I think that kind of refers back to that previous comment around this is really driving a digitalization advancement. I saw a stat last week from the States that said it showed the growth in e-commerce as a proportion of all retail spend in the States. And over 10 years, it had gone up to maybe 7%. And the last 6 weeks, it's gone to 17%. So there's been more in 6 weeks in e-commerce kind of as a share of that retail spend than they had in the previous 10 years. And I think that's a really good example of why something like open banking, open finance is really going to help drive that transformation.
Yeah, no, I think what we're going through now is going to impact decades to come, how we work and the industry as well. Matt, thank you so much for sitting down for a chat with me. I appreciate it. Thank you very much.
No problem. Thanks for having me, Liz.
Stay safe.
You too.